Trading sectors is the topic of this video lesson. Since most stocks move in correlation with those in their same sector, industry, or index, it is absolutely essential as a trader to properly identify and evaluate price action, and not just the stock you are interested in trading, but also others that too provide comparable products or services. Since it is common to see multiple stocks moving in almost complete unison, it would be absolutely foolish not to analyze the group of stocks as a whole. While you can do this by comparing multiple stock charts side by side, the easiest way is to use indexes. Many of the more popular sectors, such as gold, oil, and retail, have heavily traded indexes in which price action as a whole can quickly and easily be evaluated. While utilizing indexes can be an effective way to monitor price action in a sector or industry of stocks, ultimately every trader must know which stocks move together. Obviously, to do this, a detailed sector list must be created and memorized. While it may take a little time to create and remember such a list, understanding which stocks move as one is absolutely indispensable information to a trader. It not only can get you into great trades, but also help you avoid bad ones. For instance, if every stock in the housing sector is in a channel near highs of the day, and the one housing stock you are interested in purchasing is about to break higher through resistance, while the rest of the housing stocks suddenly break down through support, then it most likely is best to back away from buying the stock, as it is most certainly about to have a failed breakout. Now, there are many ways in which a trader can utilize the information provided when comparing similar stocks amongst each other. One in particular is a very simple and effective trading strategy involving a lagging stock in the sector. Okay, this trading strategy looks to capture profits by participating in a late reacting stock in a sector. Basically, if a group of stocks begin to sharply move in a particular direction, look to identify a stock that has yet to make a similar move, but seems as if it is preparing to. When a lagging stock is identified, look for reasons why it has not yet followed others in its sector. In some instances, a highly profitable trading setup arises as the stock may simply be held back by some large limited size, which, when filled, can create a sharp and violent break similar to that which occurred in other stocks in its sector. Sometimes, however, when too much consolidation has occurred in a stock, the lagging stock can be confined and unable to muster up enough momentum to catch up to other stocks in its sector. Hence, like with all trading setups, one must use a discernible filter in order to determine which is the likely outcome. Okay, now that we've identified the importance of sector awareness, let's take a look at some examples. First, we are going to take a look at the healthcare sector, which on this particular day was strong relative to the overall market. As a result, each stock in the sector made aggressive moves higher throughout most of the trading day. These stocks in the healthcare sector continually made new highs throughout the day, often minutes apart. Moreover, they even fell almost in unison. From this first chart, we can see Aetna, ticker symbol AET, up over $2 on the trading day as the stock made a steady yet aggressive move higher. Next, we see WellPoint Health, ticker symbol WLP, which made a $1.80 move higher, similar to that move which occurred in Aetna. Next, we see ticker symbol CYH, which stands for Community Health, up $1 on the day. While the move in this stock is very similar when comparing it on a percentage basis to that of WellPoint and Aetna. From this next chart, we see another stock with almost an identical move to that of the first three. In this chart, we see Humana, ticker symbol HUM, up over $1.50. Moving on to the next chart, we see yet another similar move, this time in United Healthcare, ticker symbol UNH. While this stock did manage to move up over $1 on the trading day, its move was less when compared to the other stocks, both on a dollar and percentage basis, simply because of its sheer size. Often larger volume, bigger cap stocks, such as UNH, have a more difficult time making sudden and aggressive changes in price. And from this last healthcare chart, we see Coventry Healthcare up a similar percentage as the others in its sector, as it has moved over $1 higher on the day. However, this chart, unlike the other healthcare charts we just saw, made a steady move higher throughout the trading day. This chart instead made a sharp move over $1 very early in the morning, and then consolidated around that price the remainder of the trading day. Due to stocks like this one, a discernible filter is needed at all times when participating in a stock due to sector-based information. Okay, moving on to our second sector example, airlines. In this example, Delta Airlines, ticker symbol DAL, reported poor earnings, which not only sent this stock down, but also its competitors, as bad news for one is most likely derived as bad news for all. In this chart, we see Delta opened down 50 cents lower than the previous day's closing price and proceeded to drop down over $2. Next, we see Continental Airlines, ticker symbol CAL, down over $2 on the trading day as this stock reacts to the negative earnings of its fellow competitor. And for fear of driving a point into the ground, we will look at just one more chart, Alaska Air Group, ticker symbol ALK. While this stock did make a comparable dollar move, being down over $1.50 on the day, it did not fall as far as the other stocks in its sector on a percentage basis. Often small cap stocks with smaller daily volume will move slightly different than the rest of its sector. Therefore, use caution when comparing small cap stocks to bigger cap stocks in the same sector, as their moves may not be comparable. Okay, so from these examples, it can be determined that stocks regularly move together. However, in some instances, they can diverge for some period of time. Therefore, simply basing a trade on the movement of an entire sector compared to one individual stock is not enough. Make sure each potential trade passes through an extensive trader checklist that you have created for yourself. Remember, the more indicators confirming a decision, the higher the probability of success. And finally, in the written lesson of trading sectors found in the classes section, a small list is provided for you containing some of the more popular sectors along with a few of the more highly traded stocks for each of those sectors. This list should be considered incomplete and should be used simply as a starting point. Expand and develop your own thorough list of stocks that you feel correspond well together. Keep in mind that stocks that you use to create your sector list should still adhere to your overall guidelines on acceptable volume, price, daily range, and so forth. When equipped with a thorough and accurate sector list, you can quickly validate moves in a stock by comparing it to its closest peers. This will help you elevate your trading and improve your overall market awareness.